Ira Epstein of Linn Associates with your financial market wrap-up for a wild Monday. And they're all wild Mondays right now. But it is April 6, 2020, and we're already into Tuesday's trade. So this is the market where it's at in the 5:30 time zone now, Central Time. And you can see that the market is just violently wild. That is the right word to use. The surprise came in over the weekend and today when we saw that New York was not getting hit as hard as it might have been. We had been prepped by the Surgeon General, who still may be very right, the doctors that may prove very right. All this extra ambulances, everything sent, and yet we're not seeing, at least in the center of the country, as we look at New York, we're not seeing that the hospital ships have to be used. We're not seeing that the triage centers in the center of Central Park are overflowing. We know that they're moving people around, doing it great. We know they're getting more of what they need, and we know that there's more problems around the country. But the market is looking for numbers. And the numbers it's looking for is, when does this thing plateau and start coming down the other side? False, misleading information that's too soon, the market doesn't care. It's going to look at the events of the day, the sentences coming out, and these markets move on that on a Monday. Now, when we have weak Mondays, big break Mondays, I would prep you and say you had a big break. Don't be surprised if you get a Tuesday reversal. I'll stick my neck out again. A big rally on a Monday could certainly lead to the identical thing, a pullback right now. And then you have a shortened trading week. So Good Friday comes. I believe the electronic markets are going to be open. However, that does not mean that you have the big trade in them, so you get thinner markets. Be careful about this. So you have one heck of a rally that has gone on with its first pullbacks tonight. We saw it was classic risk-on buying. The Japanese yen got beaten up. The bonds and notes got beaten up during the day. The metal markets took off with the stock market, even with a higher U.S. dollar. So when we come to the S&Ps, I think that one of the things I'd be saying is, as a market technician, the market had a bounce, came down last week, and closed for the week 41 lower. You're already up for the week 153. Now, I don't know where the week's going to finish out, but it certainly is giving the impact here that this is going to be a hard zone to just easily get back through. When I look at just on the June, the Fibonacci count, folks, this is the same count that I did my special report on. A 38% retracement is not a bullish retracement. I don't know what more to tell you. This is an area where people that I think that were hurting in stocks want to use areas to maybe be coming out of some of those so that they have cash on the pullback. I don't know. If it pulls back, maybe it won't. In terms of the swing lines, we have a clear lower low and higher high. So the market's trying to set a new high as it breaks out to the upside, and then the key will be 24. You have to keep your eye on that number down the road. Let's assume it goes up further. Well, the major resistance to me will be 27.32. What I teach in my charting course, right or wrong, is the first time you hit an upper Bollinger Band or a lower one, especially coming out of a broader, not real narrow band setup, that's where I think the resistance is, and that's where I think the pros will be coming out of the market. When we look at momentum, it's plain out overbought. It's not embedding, where both numbers try to get over 80 and go sideways, and then I call it switched over from overbought to locked in. You don't even have the blue number anywhere near that. So I just see an overbought market that is getting up to the upper Bollinger Band, and I'd be very cautious. When I come to the NASDAQ, I have two numbers to be nervous about here if I'm a bull. I've got a number that's the 100-day average, 200-day in gray, that's 81.84, and I have the upper Bollinger Band, which is right now at, let's see, so I've got 82.36 I said that wrong. 82.36 is the 200-day average. 81.84 is the upper Bollinger Band, and your 80.07 is where the market's at. you're coming into that zone that I'd be cautious of. The difference of the NASDAQ and the other indices was this market has managed to keep higher lows, even right here, that's higher than that one, and higher highs. When the market on Thursday of last week got up, it settled over the 18-day average and just over it on Friday. So going home, you had a market that was not overbought. You had a 67 reading, and I consider any of these readings over 70 is overbought. Not overbought, still pointing up, maybe a little bit sideways right there. You still had the higher lows, higher highs. Had the market taken out 73, 76, I'd have been all over it bearish. But who's in control and who has to defend the price? The bulls, because you've got the bias up, you're over the 18-day average, the swing line is up, and momentum is not turned down. Okay, as it turns out, they had a pretty darn good day. And now you're knocking on the door. If we come to it right here, this high was 80.99. You're just knocking on the door of that Bollinger Band. You're very, very close. In the Dow, the market is got, and it's had since last week, a lower low, and today you put in a higher high. Now, this market looked bearish to me going home. What's the difference and why would I think that? The settlement on Friday was 20,957. That's under the 18-day average. And prior to this, you had lower highs, lower lows. This did not set up a higher high. Today did. That's why I drew that arrow pointing up. That knocked the shorts out. But where are you going? 23,381 to me. That is the upper Bollinger Band in an overbought market. Probably wrong in what I'm saying, but it doesn't interest me. In the Russell, this has been the weakest of the stock indices. It still has the pattern of lower highs and lower lows. Even if you were to take out this high over here, folks, and this is, let me just walk you to it. That high was 1166.90. You can see that you came up today, you got as high as 1138, and tonight you're at 1126.60. You haven't taken it out. Even if you do, you'd end up with then a higher high and a lower low in a market that is bordered by the sideways action. So in plain English, on the stock indices, I'm just not joining in on that bull camp. And I think that you're going to see short covering in the VIX. I expect that we get to the lower band and the market tries to see some short covering. Now, we all know each conference that we're going to get, press conference I'm talking, on COVID-19 from the president and from Governor Cuomo, they are going to rule the day. The market is geared up on what these two are saying, rightly so, not wrongly so, rightly so. I would like to see less deaths. Who wouldn't? And get us out of this and people not dying. Who doesn't want that and get the economy, get a normal life again? We've got higher lows, higher highs in the bond. So it's a pullback, not a trend reversal. Now I'm watching what's going on in the slow stochastics. Both numbers tonight are over 80. They were on the close Monday, but they weren't on Friday. So it's just an overbought market, maybe in need of further slight breaks here. We'll see. You break the uptrend if you get under this low right back here. This low on this day was 178.27. That would break the pattern of higher lows, higher highs. What else have we said on this? We have said consistently, at least I have, that getting through this high is not going to be an easy task. This is one of those panic moments in the market. Where are you going to go to? A quarter point on the 30-year to get through that? It was a 0.54. So, no, it wasn't. I think that was a 1 something, if I'm right. That was a 1. It was the 10-year that was the 0.54 up here. And in this market, we did a better job. We attacked it. But here, there's a difference, too. If we take a look at the slow stochastic, both numbers on the close on Monday were nicely over 80. They were over 80 on Friday, and they're over 80 the day before. So here's the difference. This is an embedded reading. You get out of your bullish mode. You go to neutrality if the red line closes under 80. Barring that, I expect to see the pros buying this pullback and looking to see if the Bollinger Band, can they get the market up towards that number. And I say, I think they'll get out if you lose the embedded reading. In the dollar index, we have flat momentum, not pointing up or down. We have a pattern of higher lows, higher highs. That's bullish and upside bias. It would take a move under 98, 95 to break that pattern. In the eurocurrency, we're still bearish. We have a pattern of lower highs. We have lower lows. It's so broad, it's all crowded in on the chart. I'm sure you see that. The question is, does the market let go from here, make a run down to the 106.28 area? Well, we know that Europe, they're at the other side of the plateau of this in many of the countries. Not all of them. France has got its problems. But over the weekend, it looks like Spain was doing better, Italy certainly doing better. And if that is the case, how long is it before we start hearing more and more talk that they want some, how do I say this, an injection of types to be able to do it with whatever they have to do it under EU rules, but they're going to ask to have those rules bent. You watch. I'm not convinced that Germany or the Netherlands want to go in on a Corona bond, but other action, I think that's going to happen. In the Japanese yen, the yen today got hit, as it should. Two things. Obviously, the risk on was going on. Why do you want to own the yen? The yen's a risk-off currency. The second thing is Japan's got its own now series of serious issues. So it got down. But these are hard markets. I mean, they're just whipping you back and forth. There's no follow-through one way or the other. So I ask you, just watch them. They're very, very dangerous. June Bitcoin. April's still the lead month, but June to me offers a little more out there time. You can see how the market's climbing. I'm still looking to see what it does at that upper Bollinger Band. It's now in overbought territory, and it's not yet. Here, I'll come back if I could another day. Let's just see if it'll let me. Yeah. Coming in from today, you can see both numbers were not over 80. So I don't care what it does tonight. It's just an overbought market. Then we get to the differential between June Brent and WTI crude, which got as low recently as about $1, and it's trading at about $1. Actually, the trade today, the close was $3.15. The 18-day average, is $2.92 in the market. Notice this sideways action that has suddenly taken over. When you get a markets that crash like they did, the first thing they do is try to get their footing. Sort of what they're doing in stock market, and you knock out the shorts. You create a pattern where you take away, just like you did in stocks, you take away, and once you get over one of these patterns and you lose that embedded reading, the game changes on you. And you have to recognize that that game has changed, and the game has changed. Now, is it a bull game? I don't know. Will we be able to get Russia and China to make Russia and the Saudis to agree to production cuts and then get from our Texas Railroad Commission something of, I don't know, 1 million barrels a day off the market, trying to put together some type of world event where you can get Norway and other countries to join in and everybody cuts a little to stabilize prices. You're asking a lot. It's possible. We'll know. There's an OPEC meeting scheduled for this Thursday. The Saudis have not yet set their oil price. You'll notice, generally they set them by, I think it's Saturday. They haven't set anything. Friday or Saturday is when they get set. And the reason is they're keeping that over the market. They're dangling it. You want to play with me and not agree to a cut, they're saying to Russia? Watch what we do to the price. So that's the threat. The U.S. at the same time is using its power. They're saying, and they finally did it. I was surprised that President Trump hadn't made this known before. You want our protection? You want to buy our arms? You need help in the Mideast, and you're doing this to us? So you get those type of things. Then we come over to the June WTI. You can see how you've got the higher lows, higher highs, overbought. Resistance back up at 32.56. Rebob gasoline. We had spotted this way back here. This wasn't the move. The move began when you started losing the embedded reading. That was the end of the downside. Now the question is, this is the first time you've gotten over and been able to stay over the 18-day average in any manner at all. And it still has a pattern of a lower low, higher high. I'd like to see better action out of it. Nat gas. If the Texas Railroad Commission says we're cutting production. 40% of the U.S. oil comes out of Texas. What's that going to do for nat gas? It certainly isn't bearish. I didn't say it's rip-roaring bullish, but it isn't bearish. And maybe that's where the market can eventually start working off what it has to. Now, we know that there's a lot of companies that have to be sold in all the oil fields, and what's ever going to happen? Consolidation. You know, the hawks move in. I'll give you 25 cents on the dollar. And you get plays like that, and they're going to show up over and over in different areas. You know, we have our guide to technical indicators, volumes 1 and 2, and I think you'll find them, and I've talked about them often, is something very, very neat to read because it covers everything I'm saying here and gives you an explanation in an easy way. It doesn't teach how to use them. I do that in my charting course. So if you go to our website, you'll see under free offers on the bottom right, work with that. You'll choose what you want, we'll get it to you. And if you go under education, you'll find out what our charting course does. You know, now that we're all home and hunkered in for at least till the end of the month, it's a good time to spend a few hours, get the course done. What more can I say? That's one way to look at it. I'm Ira Epstein. You have yourself a good day, and I'll see you all tomorrow.